So I wanted to make this video to talk to you guys about precious metals and how precious metals are used as an investment for a lot of people. So one of the businesses that I'm involved in is directly related to the precious metals industry, in the sense that I buy and sell gold and silver in the form of finished jewelry on the retail end, and also in the form of coins and bars and other bullion. So again, there are two different aspects to the gold and silver markets. One being the retail end, where people just go into stores and buy products that are made of that precious metal, jewelry for example, and pay a price that has nothing to do with the actual value of that metal. What I'm saying is they pay a retail price. It's marked up greatly, there's profit involved, and that aspect is never to be considered an investment. So a lot of people make the mistake of, paying retail and buying through typical means and thinking that they've invested or that they have some kind of savings because they have gold or silver or even diamonds. And again, the mistake is that in order for it to be an investment, you have to have purchased it based on the actual breakdown, the actual valuation of the weight and purity of the metal. And to do that, you have to be buying it, again, in the form of what's called bullion, meaning it's not finished jewelry, but it's either a bar or a coin for the most part. And the price you pay above the gold price and silver price varies depending on where you buy from. So touching on the actual prices, there is a price that's termed the London Gold Fixed. That price is issued on every business day or trading day at 10:30 a.m. New York time. There are 5 people in the world who have the power each day to set this price. They decide what the price is going to be for gold per ounce and for silver per ounce for the following 24 hours day of trade or until the next trading day. So if it's on a Friday, whatever the price is, that'll be the price until Monday. So if you're doing transactions over the weekend, you pay Friday's price. And again, so those prices are always going to be referring to both gold and silver in the pure form, meaning 100% gold and 100% silver with no additional metal additives. When you buy it in the form of jewelry, it's typically never going to be pure, especially with gold. The reason being is that pure gold is actually very pliable and soft. It's a soft metal. So you do encounter it typically in the United States. They have, as a purity of preference, they have 14 karat. That's the purity they like. And 14 karat gold, using an example, is actually 58.5 or 58.3% actual gold. So you have to understand the content relative to what you have. 18 karat is also popular in the United States, and much more so in Europe, has 75% actual gold. So it's valued more. And the further east you travel, the higher the purity preference becomes. So when you end up in Far East Asia and China, they actually use 22 and 24 karat pure gold in the form of jewelry. They happen to like that. That's their preference. So you don't see that too much here. But again, going back to the pricing, you want to buy, as an investment, you want to buy the metals at as close to that spot price as possible. So what I said earlier as far as the pricing varying, what I meant is there are multiple sources for people to purchase gold and silver. I'm sure you've seen on TV, there's a bunch of advertisements and commercials where you can buy gold from them. If you were to utilize one of those formats, typically you'd end up paying, when you factor in the shipping requirements that they add, the insurance on the package, and the actual premium, the markup, you end up paying between 5 and 10% over the actual spot price for whatever you've purchased. So you need to keep that in mind. You're already at a losing position in having paid those premiums. I do sell those things as well, and because I buy it on a regular basis from the public at a discounted rate, I'm able to narrow those margins significantly and offer to my customer base a much, much better buying price and buying opportunity in those metals. So another thing I wanted to discuss briefly was the reason why people do this, why they invest in precious metals. For the most part, it is a hedge. So it is a bet against currencies. In my case, the US dollar is the main currency that I'm concerned with. So if I were of the belief that the US dollar was going to go down for whatever reason, it would be wise for me to take my dollars and exchange them for the precious metals. Because historically speaking, gold, silver, and the dollar are polar opposites. Meaning, if this one goes up, the dollar, gold and silver go down. If gold and silver go up, naturally the dollar had gone down. So that's typically a safe play to move forward with. But so there are a lot of people who think, again, as an example, that the United States has been very reckless in its spending. Going back for the last 10 years, they have implemented what they have termed quantitative easing, 4 rounds of it. So the quantitative easing was basically an injection of capital, I believe it was 80 billion a month, where they were actually just printing and creating this currency, all this paper money, out of nowhere and giving it to the banks, basically, and financial institutions in hopes of reviving the economy. That money was supposed to be then lent out with more ease to the public and to businesses in the form of credit, but it never happened. The point of that, that's a whole other conversation, is that because the dollar is not backed by anything, I'll just briefly tell you, it used to be backed by gold. There was something called the gold standard. So for every dollar that was printed, there had to have existed the amount in gold, the equivalent value in gold. That didn't last past the mid-1970s. So we were taken off the gold standard by Nixon. So the reason we were is so they could start printing money and they can continue basically spending beyond what they had and accumulating more significant debts. So there's a risk to that. And when a currency is not backed by anything, the term is called fiat. So the dollar is a fiat currency, it has nothing backing it. So the more they print of it, the more dollars available to us and circulating around the world, the less value those dollars have, like anything else. So a lot of people, again, think that there is going to be consequence in the near future to all that monetary recklessness. And that consequence is going to result in very negative, impact to our economy here, but in particular to the dollar, meaning the value of the dollar is going to go down. So for those people who are of that belief, they invest in gold and silver, and when that happens, naturally their value, had it been in dollars, would be much less if they kept it in dollars than it is now in gold and silver. So they've made a very wise play. Again, this is all speculation. There is no guarantee that anything could happen, but this is the mindset, for the most part, of the precious metal investor. So the last thing I wanted to touch on was the different forms of investing in these metals. So like the stock market, or in the stock market actually, there are available to people what's called ETFs. Basically, you can buy a fund, or you can buy a stock, the equivalent of a stock, that is a gold company or gold mining stock. For gold, as an example, there's a tick symbol GLD, for silver, SLV. You can buy those and basically own paper shares of gold and silver. It's supposed to be backed, guaranteed by whomever the seller is. The issue with that, and the difference that it's important for you to understand between that and taking physical possession of your precious metal, is first and foremost that there are tax liabilities. So when you're trading on the market, there's a paper trail of every transaction. You're liable for those taxes when you end up cashing out. And in addition, for those people that had the concern of the recklessness and possible, downturn in the economy, there also exists a significant risk in the sense that those shares of gold and silver that they're selling, like the GLD, they are not actually backed by enough physical gold to satisfy those tickets. So they're much over leveraged. So for example, if only a fraction, let's say 1/10 of the owners of those GLD shares were to put in a call and say, I want to take physical possession, I want to take delivery of what I own in actual gold, the whole entire thing would crumble. It doesn't exist. So again, you can understand why, for those people who are basically prepping for some kind of catastrophe in the economy, why it makes much more sense to have the physical gold and silver. So if something does happen, you can then sell it anywhere in the world and not have to be concerned with tracking it down and cashing out, your paper. The paper would be worth nothing if there were a significant, very serious economic event. The paper would be worth nothing. Just like when you have your money in the bank, you'd go running there and line up, and you'd be there with hundreds of others, and they would have no money for you. So I just wanted to briefly touch on this. This is just an introduction into this aspect of investing. There are so many other points to touch on, and global conditions and circumstance that affect these prices that I have to be aware of at all times. But again, I just wanted to give you guys a brief. I hope you enjoyed it, and if any of you have any interest in getting involved further, feel free to comment, and I'm glad to answer in any way I can. Thanks.